Hi and welcome to yet another edition of Who Moved the Market. I'm Surabhi Upadhyay and with me on the show today is Sonal Bhutra. Hi Sonal, welcome back to the show.
Oh yes, and so much is happening, right?
Absolutely. Well, if you're watching the market, the large indices, the large caps really are not doing much. They're under pressure. But over the last few days, all the action literally has been in the mid-cap space. So we thought we'll pick out some of the biggest movers of today's trading action, the top 5 movers, so to speak, and tell you why they're moving, because the levers or the reasons are different for each and every stock. So we've got Sonal here with the list, and it's always good to start on the optimistic side of things, right, Sonal? So I thought we'll start with a company that you track very closely. It is from one of your sectors, and that's Deepak Nitrite. 10% up on the stock. What's happening?
Okay, let me just burst the bubble first up. It's an exaggerated one that we are seeing on Deepak Nitrite today. Of course, the news is positive. To tell you the news first, they have entered into a memorandum of understanding with the Gujarat government. They'll be investing 5,000 crore rupees over the next 4 years. This is across the product line. Specialty chemicals, they'll be getting into their current product line also, that is acetone and phenol. They're getting into something new that is called Bispinol. So that is a new product category for them. This will be done at their existing capacity, which is the Dahej plant and then the Seri plant, big capacities that they have there. It'll be used across all the segments.
But this is fresh greenfield commitment that we're
absolutely.
talking about.
It's an organic growth prospect that the company is looking at. It's a greenfield project that they're looking at as well. It'll be used across their current product profile and the newer ones as well. The specialty chemicals will be catering to agrochemicals, pharma industries. They have something in bisphenol which will cater to adhesive segment, which is again used in polycarbonate. So it's like a long value chain here, which will ultimately be used in different segments like automotive, electronic, consumer goods. Now again, they have signed an MOU with the government. Remember last month, Anupam Rasayan had signed a similar contract with the Gujarat government, and the stock was higher as well again. So a lot of these specialty chemical companies, they have their plants in Gujarat, and they keep signing these MOUs with the government. Here in particularly, Deepak Nitrite also says these are some import substitution products they are going to be setting it up for. Now why do I call that it is a good news, of course, but a 10% move, why do I call it is a little bit exaggerated? First thing, it's a commoditized company. The products that Deepak Nitrite makes are all commodity chemicals. Last 2 years were not so strong because of the way Russia-Europe crisis happened. Crude prices went down, led to lower revenues for the company. They had issues with respect to supply chain across the globe. That's why even if whatever asset block they had, they could not convert it into higher revenues despite the asset block or the capex that they had put down. Now going forward, we need to realize whether they will see a recovery in realizations or not. So even though they are doing a 4,000 crore or 5,000 crore rupee capex, will they be able to get the multiples they used to get pre-COVID, which was a higher number, so to say. Now commodity cycle has not been in their favor. Going forward, important to see for commodity companies whether the cycle is in their favor. So if they're putting the capex, they'll actually get the return what they expected it to be like.
And these are all a lot of the products that you spoke of. A lot of them are intermediaries for several large industries, whether it's auto, whether it's electronics. You mentioned polycarbonate as well.
Yes.
Right? It's used across. Every time I talk to Sonal about these things, I just wish I had saved up my class 12 chemistry notes a little better. I could have gone back and kind of referenced them. But anyway, so your point is that we don't know whether the going will be as good for all of these product categories, say for the next 4 or 5 years. By the time the capex comes on stream, we don't know what cycle, what part of the cycle we might be on.
Exactly. So yes, it's done with a great intent. They are looking at organic growth, which is very important for companies, but they're not exactly a specialty chemicals player, where the asset turn is way higher than commodity chemicals. So that is a factor that we need to watch out for. The street is optimistic. Again, that's on the positive commentary that the management has given. Additionally, also we need to look at the positioning, because the stock had declined so much because of the weakness that we had seen. So yes, some optimism is what is building up in the stock today.
Fair enough. It is a large capex, but I think a lot of the concerns that kind of come with it can be kept in mind as well. Which takes us to the next stock. I think we're doing the Ds right now. So we've done Deepak Nitrite. Let's talk Dixon, because Dixon's had a blowout move. That's on the 4th quarter results. And Sonal, I know that everybody was approaching these results for Dixon with a lot of sort of inhibition, because the company hadn't done well in the past. Q3 was really bad. They weren't giving a guidance. But by the looks of it, I think compared to the more mellow expectations. It's been good going?
Oh yes, it has been, and we've been pointing out how the entire sector has done well this quarter. And as you pointed out, Q3 was weak. They had scaled down their guidance in the mobile segment. Mobile segment hadn't done well, and that is where the most optimism actually was from the street's perspective as well. So this time around, it's a top-down beat for Dixon, and revenue growth is led by both mobile segment and home appliance segment for the company. They had indicated that yes, Q3 was weak. We will see recovery in Q4 in their mobile segment. That has come through. Margins have expanded across all the segments, also indicating that yes, maybe the worst of margins is behind. Their commentary has been very positive as well. So quickly taking you through the numbers, just to give a highlight, revenues are up 4%, again higher than the poll at 3,066 crore rupees. EBITDA is up 32%. Most importantly, there's a gross profit margin expansion of 100 basis points, and that really bodes well for the company's operational performance. Their profits are up 28% at 81 crore rupees, and across the board, again as I said, consumer electronics, lighting products, home appliances, most importantly mobile and EMS is where they've seen both a YOY and a quarter-on-quarter increase in terms of margin. So if we just talk about the mobile segment, because that's where there was a bit of disappointment in Q3. Their EBIT in absolute terms had fallen last quarter, and that has recovered now, and that's exactly maybe what the street is liking right now, and they're optimistic as well going ahead.
Okay, so that's Dixon reacting very well to numbers, at least in Q4, which brings us to NCC, and now let's throw some politics in the mix as well. Now, just to take a step back, today NCC is up. Yesterday NCC was down almost 7-8% yesterday.
A sharp fall suddenly.
It was a sudden sharp fall, and there was some chatter that maybe this has something to do with the fact that there's a new government in Karnataka. So Sonal, tell us the details again. Nothing official yet from the company. There was some nervousness about their Karnataka operations yesterday. But today seems very different. There's a recovery on the stock.
That's what markets are, right? Changes in a day. But of course, putting highlight on this one, there are reports suggesting that the newly elected Karnataka government, they have ordered to stop release of funds for any orders given by the previous government. They've also said that any pending work which is going on, which has not even started, that should also stop. It should not be continued in the way it was supposed to be done. So rationale was that state finances will be burdened by 50,000 crores of pre-poll freebies that these governments or these parties had announced earlier. This is what the report suggests, and this is the reason why there was some nervousness in NCC, because they have the highest exposure in the infra space in Karnataka. Now, some reports and some brokerages have come out and they have calmed those concerns. They're like, it's not such a big deal. First of all, it's because Karnataka is not a capex leader. They do not see a lot of capex happening all the time, and it's not a material part of the ENC backlogs of these companies. They've given some numbers as well. For L&T, it's just 1% of their order book, which is like minuscule in the big order book that L&T has. So of course, not a big impact on L&T that we've seen. For NCC, it's 11%.
Which is not small. I mean, 11% of your order book being exposed to, maybe some political risk in a state, it's not exactly small. But yeah, they're saying mostly it's in JVs. It's a small one. It's in JVs. And the CLSA note that I'm reading is they are saying that important to monitor jointly funded projects like the Bangalore Metro. That's a big project for NCC, but the idea is that a project like Metro will not be halted. You can't roll it back. There'll be a lot of backlash. Not getting into politics, but this is not a project that any government can actually stop. So that is where NCC's majority order book lies. So it's not a concern according to CLSA. They are saying large projects like Bangalore Metro Phase 2 is funded with 50% from multilateral agencies. It's not only NCC which is putting all their might there. So it's not such a big exposure there. And they also say that they see yesterday's weakness in all these stocks as a buying opportunity. So they have calmed those concerns, saying that no, it's not such a big deal. The projects where NCC is invested in, that is not where they'll see, they will see funds coming out, or they do not see that projects being halted for any reason. For what it's worth, the market is listening to CLSA's argument as of now, and we've seen buyers come in after yesterday's fall, which brings us to the last stock on the upside out of our top 5 list, and that is Mahindra CIE, where we have seen a block deal where Mahindra and Mahindra has sold off some stake. So tell us more about this.
Yes, it's the last phase of their stake that they had. Now there is no stake that Mahindra holds in Mahindra CIE. We got the confirmation as well, 3.3% stake, which was pending in Mahindra CIE. It has been done away with. And remember, they had sold around 6% stake in March 2023 itself. That was at a price of 357 rupees per share. M&M got some money from that, of course. And this time around, it is a positive because it takes away the overhang that Mahindra CIE had. There were questions, what will happen now, what's next, there's just 3% stake, will they come ahead, they'll sell it. So it's more of a technical factor that, okay, there was an overhang that this particular investor, so to say, this parent still has 3% stake, will they go ahead and sell it or not? So that overhang gets removed, and that's why my investors are overjoyed that, okay, this pending thing that was on our head is done away with.
And also the valuations, right? Because just 2 months back, the deal was done at a lower price, 350 thereabouts.
Correct.
Now you're talking about I think a 25% markup.
Yes, it's a 25%. 28.7% to be exact, in less than 2 months is the premium that we've seen here. Additionally, just pointing it out, there is a Motilal Oswal note as well. They've gone ahead, upgraded their EPS estimates by 6% for this calendar year and the next calendar year, talking about how there is a recovery in the European market, and that is something that will drive their numbers. Now remember, Mahindra CI's numbers very strong in Q4 FY23 as well. The stock has done well as well, and if there is further recovery which is expected from one of their markets, especially in the EV segment where margins are higher, that could also bode well for the stock.
Okay, so that explains the up move on Mahindra CIE. 4 up, 1 down, and we're back to a company that Sonal tracks more closely, and this is Polyplex. The stock is down, I think 9-10%. I caught one of the headlines that promoters are selling some of their stake. Always gets the market really worried. What's going on here?
Not at all expected, first of all.
Okay.
The expectation was of their Thailand unit getting sold to an international buyer. Okay. That is what the company has been reporting to the exchanges as well, that we are in the process of looking for a buyer, we are in the final stages. And even if that had happened, people were thinking if at all promoters sell, they'll sell it out completely. It will not be a partial stake sale that will happen for Polyplex. It's a packaging company, we don't speak about it so often, but this was in the news because of that. Now the news is that promoters, as you were pointing out, will be selling 24.27% stake, which is to a Dubai-based investor.
24.27? That's
yes,
a lot. It's
that's
not
a
like
big
selling
amount.
2-3% here and there. Wow, almost 25% stake being sold.
Yes.
Out of a total of 50%.
50% stake. More, little more than 50% to be exact. It's around 50.97% stake. Selling it to a Dubai-based investor. Now, this is, if you look at the valuations, it's a 17% premium to yesterday's closing market price. At 1379 crore rupees is the total consideration. One would think, oh, it's a premium, why is everyone so worried about it? It should actually get a thumbs up. But 2 reasons. First of all, they've just sold 25% stake. This has happened after the stock fell 50% already from a 52-week high level. So the investors were thinking that it'll be a better deal. Then we'll enter, somebody who's entered at a price which is 50% higher than the current market price. They do not see any further triggers to get into the stock. They're like, okay, there's nothing.
The deal right now has happened at a price. What's the variance from the current market price?
From the current market price, it's yesterday's market price. It's 17% higher.
17% higher to yesterday's close.
Correct,
price.
but still the stock is down 52% from the peak. So now there is no additional trigger for people to get into this. They are like, promoters have sold at such a lower stake.
And also, what instantly comes to mind, and I'm sure this is going to be a chatter for some time to come, you are selling half of your holding. But you've structured it in such a way that you are just below the 25% threshold, which would have triggered a takeover offer.
Exactly.
At least I, as an investor who's sitting on these huge losses, at least I would have had the option of tendering at that 70%
open offer.
high.
Exactly.
This is not good corporate governance.
Exactly. So open offer is something people were expecting. They were thinking it'll be at least the entire stake sale. So
at
that
way exit opportunity.
You will get an exit opportunity. That didn't come by, and that's why this is the disappointment. People would again think that 17% premium, right? Oh, it's great and all, but internals are not like that. And there, some big funds hold stake in the company. There's Nippon Life. You will see Morgan Stanley. All of them, FPIs and mutual funds, hold around 12% stake. We need to see whether going forward, this investor AGP Holdco, whether they'll take more stake from the promoter or they'll take it from the mutual funds or the FPIs. That is absolutely unclear. But I thought I'll just tell the viewers that this is the scenario with respect to shareholding into the company. The second part is weak set of numbers. Packaging industry, because of higher crude, the spreads going down, more supply coming in the global markets, they have not been doing well. Similar is the story here. Revenues are down 35%. They have reported an EBIT loss. Losses have expanded. So that also fundamentally is not looking good. So 2 bad reasons or 2 negative news here for Polyplex.
Wow. All right. There you have it. Don't think the market's quiet or flat. There is so much happening between the surface. We just gave you a glimpse with these 5 stocks. Sonal, thanks very much. Lots of details there and very interesting ones.
Thank you. It was fun chatting about these underneath the broader markets.
Absolutely. The currents beneath the surface. We will quickly take your leave on that note. Thank you for watching. See you again with another theme tomorrow.